We need to continue to fight inflation until we win this fight. And the Fed is going to do exactly that. Why it is necessary? Because if we lose price stability, we undermine growth and we hit people's well-being.
The stubbornness of this inflation number is what's worrying.
It is exactly that. Stubborn inflation means stubborn central bank action until we see the inflation trimming down.
Your economist on Questioning's Business talked about the worst is yet to come. How bad will it get?
Well, it depends on us. If we walk this very narrow path in front of us, in which monetary policy does its job and fiscal policy does not stay on the way, but supports the most vulnerable people, we will have a difficult time. There will be pain, but it would be less than if we fall off the path because of uncoordinated monetary fiscal policy action. I personally believe that if we act decisively on the monetary policy front and on the fiscal side, and we act together, there is a coherence of what countries do, we can walk this path.
The other big area, of course, is spillover effects. And you can't make an omelette without breaking eggs. And if you're going to have that decisive monetary policy, there will be problems for emerging and developing countries.
And this is why it is so important that this week here in Washington, we concentrate on these spillovers and we mobilize to support emerging market and developing economies in three ways. Number one, central banks in advanced economies to think about the spillover impact and then seek instruments to support countries like the Fed is doing with extending swap lines to emerging markets. Number two, to mobilize the IMF and other institutions. We are countercyclical. We are there to provide buffers to country. Number three, zero in on the really big pain, debt and food insecurity.
This morning, there was a sort of some civil protest outside the building, by and large peaceful, but they did stop the traffic and it was noisy. But the call there was cancel the debt. Now, you and I have talked about this before. At some point, wealthier countries are going to have to consider cancelling the debt.
This is what we said last year when there was a debt service suspension initiative. We kicked the can down the road. And since then, the world economy went into an even tougher direction. So the debt problem is growing, it is not shrinking, and at some point that needs to be restructured. In other words, those who have provided those resources need to take some hit to stabilize the countries and help themselves by avoiding a debt crisis.
Has anyone told those lenders that they're going to have to cut the debt?
We have been saying that over and over. The technical term is debt restructuring to bring that sustainability, and we have that sustainability analysis for all countries that are in this position. Please do what the analysis recommends to be done.
Including cut?
Including cut.
Finally, we meet several times a year. We're meeting at a particularly dark time, of course, with Ukraine and the war. The balance of risk at the moment is very much still on the downside. How confident are you?
The biggest risk is that we are moving from a period of time of more stability, low inflation, low interest rates, to a completely different status of the world economy, more volatility, less predictability, high interest rates, and this transition we are doing at a time when the world is less together. So what I worry about, can we muster the will to have this pragmatic multilateralism that acts in the benefit of everybody by solving problems that we can only solve together?
Answer your own question. Can everybody muster the will?
Of course we can. And you know what the answer to this is? Get more women in decision-making roles. then there would be peace, and then there would be will to act together.
If you think I'm touching that one with a 10-foot pole, you're wrong. Managing Director, thank you.
Thank you.